was the margin expansion, which was likely aided by demand uptick in the fourth quarter. They alluded to that in the press release as well. But the outlook for FY27 ultimately is going to be key. The input cost pressures that were already underway and more on the horizon, how do they pass that on? Is that demand enough to ensure that that gets absorbed is going to be absolutely critical to watch. But having said that, the margins actually expanded to 8%. And though it's only a 1+% increase in the revenue, it is the highest run rate quarterly with regard to the revenue. So that's something to bear in mind. Finally, Mahindra Lifespace developers, small update for you. They're launching, or they did launch yesterday, a residential project in Mumbai. I'm not telling you the name of the project, but ultimately the most important part, it has a gross development value of 1,650 crore rupees, so bear that in mind.
Mahindra Sky Terraces.
Okay.
I'm just making it up, really. Would be something like that. Okay.
Because I remember a different name, Neeraj.
Yeah, no, I don't even know.
I was wondering if I looked at the wrong notification.
No, but Sky Terraces is what every project right now has as part of it. It's amazing.
Okay, three names on my list. First one is Shree Cement. Volumes grew by about, in the results, volumes grew by about 9.5% YOY, which was actually a pretty strong number for Shree. Blended realization was up about 6% quarter on quarter as well. But there are some interesting things for everybody, including me, who thought that the prices would effectively quell all issues. EBITDA per ton for Shree for the quarter was down 16% due to higher input costs. So clearly, the price hikes, even if they were taken in the month of March, have not quite quelled all of that problem. The recent price hikes, they've said in the con call, of 25 rupees per bag have been implemented across regions, but they also say that the impact of the West Asia crisis is expected to reflect from quarter one with an estimated EBITDA hit of 150 rupees to 200 rupees per ton. Now, this is a stark statement because in some sense, this is one of the leading cement companies saying that there will be an impact, and despite the price hikes that have been implemented, there will be a hit of 150 to 200 rupees per ton seen in quarter one. So bear that in mind. It could well be true for the other cement players as well. Interesting. Citi has maintained a buy. They've cut the target price slightly. They believe that the operational efficiencies augur well in a volatile environment, but the higher volumes were offset by lower realizations and higher costs. So that's first one. PB Fintech, very quickly. The second one, revenues are up 36%, EBITDA up 94%, EBITDA margin at 10.6 versus 7.4. This is all YOY, by the way. And the profit after tax up 53% at 261 crores versus 170 crores. Morgan Stanley's maintained an underweight with the target price of 1215. Why do they say so? They say that while it was a steady quarter and the adjusted EBITDA beat forecast, new protection premium was strong. So all of these are positives for the quarter. But they believe there are it's expensive valuation, then there's some unknowns regarding to rules and regulations that could come in from the government side, which could hit PB Fintech, and which is why they are underweight. However, just looking at the quarter, the street might be pleasantly surprised today. Our systems, certainly a decent set of numbers. Revenues up 30%, EBITDA up 33%, EBITDA margin at 17.5 versus 17%, and net profit up 70% at 65 crores versus 38 crores. Pretty solid set of numbers. So a few that you could keep an eye out for, but there are truckloads of numbers and newsmakers more, which we will of course talk about after this very, very short break. We need to slip into one, come back with the top trading strategies for the day.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi, weeknights on NDTV Profit.
Welcome back. Let's look at the implied open. It's flat, so nothing much happening. Most of the gains which we saw yesterday was pricing in what the rest of the world is now possibly, and which is why you're seeing an 18-point downtick. Having said that, if you really have any clear movement on a ceasefire, not even a ceasefire, a final deal between Iran and the United States, we might see sharper moves on the market. For now, it's back to regular business, I suppose. Parag Thakkar Kushpora joining in this morning as always. Parag bhai, are you impressed with any of the numbers that came out post-market close yesterday? Did Bajaj Auto impress you?
Yeah, so Bajaj Auto as usual. Bajaj
What did you think of the buyback number? 12,000 rupees?
Yeah, good. 5,600 crore buyback, 1.66% of the equity at 12,000, and from whatever I could gather, promoter is not participating in the buyback. So that also tells you that promoter feels that the intrinsic value of the company is much higher. And stock is trading at 22 times FY28, not very expensive for a company like this. Of course, there are headwinds of commodity.
You're comfortable with the valuations, looking at how the results were?
I'm comfortable with the valuations. The only, and see, 45% of the revenues are exports. And there they have a huge tailwind of rupee depreciation. So that offsets to some extent the commodity input cost pressure.
But they hedge, not to a certain extent.
Yeah, but it keeps, so the hedge is there. But the point is that it is still going up only. So 95, 94. So now whatever exports they will be doing today will be hedged at say 95.
Sure.
So, so they have that huge advantage that 45% is exports and rupee is depreciating, and that kind of right now I hope rupee does not depreciate from here. But I would say that, and with oil falling, I think rupee will not depreciate. But I would say that 22 times it's okay. It has recently run up, so I'm a little bit worried. But
the margin picture is sustainable for you?
I would say, see, margins can come off a bit because steel prices have gone up too much. And that is a problem for the entire auto industry, I would say. But Bajaj Auto is well placed with comfortable valuations, and they are going to launch 10 new Pulsar models.
Is it a buy at 10,319?
So I would not mind buying it, but I will stagger it.
Okay, a staggered buy. Kush, should we start with Bajaj Auto and round it off and then go to the rest?
Absolutely. But just before that, I'm just amused by how much the word hope has started entering our conversations. I think I mentioned it a couple of times yesterday. Parag bhai right now mentioned I hope Nifty the rupee shouldn't really weaken from here on. So just an interesting observation. Bajaj Auto, good moves. It had a medium term rising trendline support which it broke and sustained below it for a while now. So the view was turning a little iffy. But the buyback was a shot in the arm. It's risen quite a bit. To the question whether you should buy it or not, right now, I would suggest if you do get it around the 9,900 mark or between that 9,900, 9,700 zone, that would be a better buy. It's already run up quite a bit.
Before you get to the index level, I do want to ask, since we're on the subject of Bajaj Auto, let's close that out. If you have held Bajaj Auto shares or managed to get it within the last 2 weeks, would you tender your shares in the buyback?
If promoter is not participating, in my view, you should not tender.
You should not? Okay, because there's a potential for upside.
Promoter is very market savvy person and announcing buybacks. They already have huge amount of cash. In the so high, fantastic ROIC business. Now new models are getting launched, 10 new Pulsar models. They would want to gain more domestic market share. Exports, so they are doing very well only. So I would say that electric two-wheelers, electric three-wheelers. So I would say that I think if investor is holding it, I think there is no point in tendering in buyback unless you need money and.
Okay, so there you go. If you had a question of whether or not you should participate, you've got your answer right there. Kush, let's go to the index view, because what an exciting end to trade yesterday. Everything is shifted upwards, hasn't it?
What a climax, I would say, to that movie. You know, if it were a movie, that would have been a surprise nobody anticipated or expected, right? But see, usually I give you very clear answers कि buy करना है, अभी नहीं करना है, इस level के ऊपर करना है. आज नहीं है. Aaj I'm going to give you, especially the viewers, two options. Okay, one, you could either say, अच्छा ठीक है, थोड़ा और ऊपर जाने दो, थोड़ा और clarity आने दो, फिर buy करेंगे, or you could be a little optimistic, read greedy, and buy now. The data is also actually so placed. See, we've spoken about 24,300 being that stiff resistance which the Nifty had to cross before the tide turned for the positive. We did, but only just. So if you believe that, yes, this is indeed that crossing of, the key resistance, then you go out and buy. I do believe that, levels of 24,600, 24,800 are really, on the cards for the Nifty. Even if you look at RSI for that matter, right? 56, pointing north, moving higher, right? But it's in that 50, 56 zone. 60 and above is where you really turn bullish. PCR, mild concern because it's already at 1.19. Above 1.13, it turns, a little overheated. So there is room for further upside. So like I said, I'm giving you choices. But if you really read between the lines, the choices are between, going long or going long. So yes, the supports have definitely moved higher from 23,900 to 24,100 now. So there is this undertone of bullishness in the market. And like I said, it depends how aggressive you are. If you want to be really optimistic, you could go for a long trade right now. Keep your stop losses near 24,000, 24,100 mark.
And any kind of specific picks that you would look at?
Again, going with all three longs, from a trading perspective, and a couple of updates also, by the way. So I think housing finance was something that we were discussing yesterday. India Shelter is something that popped on my radar, from the last couple of days. It's had a good move. The 200 DMA resistance is where it's slightly acting up, but it closed above that yesterday. Volumes for the last three sessions very healthy. So yes, India Shelter is something that you can consider. 860, 884 are your targets. 815 is where you keep that stop loss. Gabriel India, very similar structure here too, but for the last two sessions it's closed above the 200-day moving average, so breaking that barrier also. 1115, 1145 are your targets. 1055 is where you keep that stop loss. And Linde India is a stock that we discussed two sessions ago, went on to hit target 1, cooled off just a tad bit, so you can continue holding on to Linde for the second target of 7830, but bump up your stop loss to 7455. Just one word on Genus Power. We discussed it on Monday with a second target of 333. Big move yesterday, already above that, second target. So if you want to continue holding on, you could, but my suggestion, book partial profits at least.
Okay. So a lot of calls this morning, a lot of companies to talk about as well in the Midcap IT pack. Parag, what did you make of Hexaware? And then we saw Coforge a couple of days ago as well.
Yeah, so Hexaware also good numbers, I think. And now stock has also corrected massively, like Coforge only, same. Stock is now at 459. I think the 52-week low is 400. This quarter they did, I think, 359 crore PAT. So I would say that on valuation basis it has corrected and the numbers were optically looking great. I would say, not great, I would say, based on what the stock price has corrected. From that perspective, the results are looking good.
Yeah, but IT sprung a bit of a surprise yesterday, Parag bhai, on the valuation front, and Coforge also did well. You reckon this one could do? I mean, are you in a buying mode into any of the beaten down Midcap IT?
So as I said, very selective, looking at results, looking at commentary. So Coforge we discussed yesterday, stock was up. Hexaware, I don't think like Coforge it will go up, but I think Hexaware should also.
You're not investing there right now.
Yeah, not much. Right now, the space which I am most excited about is cement.
Okay. Actually, coming on
of
that.
course, financials will come back with this credit guarantee scheme of 2.5 lakh crores and oil cooling off.
Yeah, and HDFC Bank has some positive news too, and we'll talk about it. But first, since you mentioned cement, Parag bhai, the Shree Cement call seemed to suggest that despite the price hikes having been done, EBITDA per ton was down in quarter 4 and will be a hit in quarter 1 as well?
So that particular thing, it is company specific, right?
Okay.
For example, Ultratech on the call, Mr. Atul Daga has clearly said that June is not a worry, which means, with reading between the lines, this is not what he has said. I am reading between the lines that they have inventories of petcoke and coal, thermal coal till say May end or June 15th. Right, so they are well positioned in that matter. By the way, I just did a channel check today morning. The thermal coal, the last shipment which has come is 10% below the previous one. So already what we are seeing in crude oil has started to boil down to some of these commodities also. So and the price hikes are happening gradually I would say. And most importantly, Ambuja recalibrating. This we discussed actually that. Right now they are at 109 million tons. Going to 150 million ton was the target for FY28. Now they have delayed it to FY30. Even Shree Cement has indicated that next year their capex, earlier capex plan was 1900 crores. Now they are going to spend 1500 crores. So everybody is recalibrating their capex plans. And so capacity expansion overhang, which was there in the cement sector, it might reduce a bit, and this is great positive for a company like Ultratech, who is expanding at a lowest capex cost per ton and making highest EBITDA per ton. This time, if you see, Ultratech's EBITDA per ton is more than Shree Cement's EBITDA per ton.
Okay. Pecking order, I know you've said it in the past, but let's have that out. And if possible, if you're looking forward 1 year, based on the thesis that you have, or even longer if you prefer, what in your mind should the targets be?
Targets, so I would not like to comment on specifically targets.
But return potential.
15 to 20% for a large cap like Ultratech is in my mind.
Okay,
and that I've already said, Ultratech and Grasim is a large portion of my portfolio, and I would like to stick to that. Of course, then JK, Shree, Ramco, all will do well. The sector is in a good shape when everybody is recalibrating their expansion plans and reducing their capex intensity.
Okay, let's close the loop and talk about technicals as well on the stocks that have been mentioned.
Doesn't really sit all that great. I mean, from a technical perspective, there are lower high, lower low formations being made, at least on the weekly setup if you see. So it's not as encouraging and not as broad-based, a buy where I could say, no, of course, cement completely looks well. You have to be very stock specific. Grasim is something that we discussed yesterday as a call, by the way. 25 was the first target, came very close to that. So remain constructive on that. One slightly preemptive, trade could be Dalmia Bharat, because unlike its peers, this one's not corrected, it's consolidating, and it's hitting that 2000 mark pretty consistently. So I think a break above 2000 could actually put it into a higher trajectory. So Dalmia Bharat, like I said, a preemptive trade. Grasim still continues.
Okay, let's go across to Somit. Somit joining in this morning, as he always does, with what is the buzz we're picking up on the street.
Well, the first stock is on Ola Electric. Now, what dealers are indicating is that the company might launch its QIP as soon as next week. They have already completed the roadshows and they are taking analysts for a plant visit this week. So most likely they would launch their QIP next week is the buzz on the street when it comes to Ola Electric. Apart from that, there is Yes Bank, which remains in focus. There are buy flows on the large HNI desk. Dealers are indicating that there could be some positive news flow that would be coming in very soon for Yes Bank. So keep an eye out for that counter. For Coforge, the stock had gained yesterday in trade on the back of strong set of numbers. But what dealers have indicated here is that a large domestic mutual fund has been a seller at higher levels in Coforge. And lastly, when it comes to Hindustan Zinc, multiple dealing rooms have indicated buy calls to their clients based on technical charts. And for LIC Housing Finance, there are buy flows on the PMS desk. Dealers are expecting a steady set of Q4 numbers coming in from LIC Housing. And moreover, there could be also a valuation catch-up when it comes to LIC Housing is what dealers have indicated. And yesterday we did mention about PB Fintech, and that company has reported a strong set of numbers.
That's a good point. Actually, PB Fintech, we should talk about that. Thanks so much, Somit, for that. Parag bhai, any coverage on this or rather any view on this? PB Fintech got a bit of a tailwind sometime last year on account of the treatment of life insurance products. There's also this big conversation about bank assurance channels
Yes.
and all of that. So all of those are tailwinds for this company, and that's reflecting in the stock in the
so company
earnings
is doing
performance.
extremely well, and I have been tracking this company since I was a buyer in this company at around 400 rupees when the stock price fell due to that forced selling of the early investors exiting. So it's a good, one of the good companies where a futuristic company and good platform. So I would say that, right now I don't hold it at this price, but and I don't have a very strong view at this price also. But I would say that it's a good company, one of the good companies which recently got listed.
Okay. All right. Let's talk about a slew of newsmakers that we will focus on today. And in fact, we've already talked about more than 9 stocks that are in focus. Let's bring you more. And Varsha joining in to tell you about that. Varsha?
Yeah, let me start with Worry Energy. So I'll be talking about 4 stocks. So first is Worry Energies, wherein ARM has signed PPA with Solar Energy Corporation to develop 300 megawatt wind power project in Gujarat. Then you have Rosel Tech, wherein they've secured order from a overseas defense customer, and this order is for manufacturing of electrical wire harness. Then you have Servotech Renewable, wherein they've received order from South Central Railway, and the order is for 1,415 kilowatt rooftop solar system. Lastly, you have Ares Infra Solution, wherein they've received a developer as a service order from Vadhva Group. Now this order is for Vice City Township project in Panvel, and the project GDV, that is gross development value, is estimated around 650 odd crores, wherein the potential upside is also 400 crores. So these are all the 4 stocks which can be, which can buzz on the back of news flows today.
I do want to ask about, thanks so much Varsha for that, not these stocks, but one of the stocks that Somit was mentioning was LIC Housing Finance, and we saw the results of Aadhar Housing as well just a short while back, and we keep talking to Parag Bhai about that. I think this is one of the stocks that he owns. He's mentioned it in the past, but specifically on LIC Housing Finance. Do you have an opinion on this?
It's the cheapest stock in the market.
There you go.
Cheapest stock, 6p, 0.7 times, 6 time book. Like it is, if there is some positive surprise in the result, as Samit was highlighting, the stock can go to places. Because see, what the problem was that PSU banks were pricing their mortgage rates, prime mortgage rates, so lower that LIC Housing Finance was actually losing some business to PSU banks because they could not reduce the rate so much. So if that rate goes down, and if they don't lose their business to PSU banks, and if they report good growth, which I think in Q4 affordable housing finance has done very well. So if it does well, multi-valuation is absolutely completely roger.
Have you studied their return ratios and
so everything is perfect. There is no problem. There is only a problem of growth. Because they are losing, because the competition is so intense in mortgage market that they were losing some business. So they were not able to grow their loan book.
Fair enough. So if you look forward into FY27, if you say for LIC Housing in this context, what according to you is a decent run rate of growth?
10 to 13% if they can do, I think stock can give very good returns.
Okay. On the technicals for LIC Housing?
Not bad at all. It's had 7 weeks of consecutive gains. Also, if you see on the daily setup, it's crossed above the 200-day moving average for the past 5 sessions and holding ground and gaining some, in fact. And one more important point is that, how we've discussed time and again that a lot of stocks have risen 30-40% in the last month or so. This one's risen only 26%, only because relative, right? Despite all of this, it's not overheated either on the daily setup or on the weekly setup. So definitely room on the higher side for this one. 600, 625, I think are immediate targets for LIC Housing Finance.
Got it. Okay. Well, always has kind of in some fashion perennially been cheap. So it's not that it was very expensive, then has become cheap, and therefore it's an opportunity. Please keep that in mind. And I think Parag Bhai would kind of certify that it is the cheapest stock, but it's never been too expensive as well. Keep that in mind.
Yeah, because growth rates are low.
Yeah, exactly. And there are maybe other housing finance companies which are doing so well, Aadhar Housing, for example, or some others. You'd be happy with the outcome of what's happened in HDFC Bank, Parag Bhai, because it seems that if at all there was any governance overhang, if at all there was, it's now been cleared. The independent firms have found nothing at all. Is this a trigger for the stock or not really?
No, so basically I would say that valuation-wise, all private sector banks, large private, HDFC, ICICI, Axis, Kotak, all are very cheap. Okay. Now, why they were cheap? FIs were selling them. Why FIs were selling them? One fundamental reason was if oil goes up, there can be asset quality issue in the future. Oil goes up and stays there, right? So duration of the conflict, as I keep saying, was the most important thing. Now that yesterday we saw a little bit of cool off in crude oil, the sentiment can turn positive for them. Valuations are already very attractive. And as of now, no bank has said that we'll have an asset quality issue. At least the large cap private sector banks or large cap PSU banks have not said that there is going to be an asset quality issue in the near term. But it all depends on duration of the conflict. So I would say that, and first of all, I have always said that HDFC Bank, I have always seen that there is no governance issue.
Yeah, of course.
It was just due to this chairman resignation, this entire thing got triggered. But I would say that, so yes, I remain constructive and...
Sounds good.
Yeah.
Perfect. Okay, we're going to talk about some of the other oil sensitives as well. Can we play oil sensitive stocks which are in the adhesive space, in the paint space, I think, and it'll be lovely to talk about all of that too. But since there are a slew of earnings, let's get in Mahima to tell us what else should be on your focus. Mahima.
Right, so Neeraj, I'll start with Brigade Enterprises first because, overall we've seen a mixed bag in terms of real estate this quarter, and Brigade is on the lower end of that because overall collections have not grown much for them. Average realization growth just stood at 7%. Leasing, segment saw growth of around 17%, where footfalls in malls grew by around 7%, and hospitality grew by around 5%. So overall, in terms of numbers, revenue was down around 0.2%. EBITDA saw a downtick of almost 12%. Margins came down to 25% versus that of 28.5%, and net profit was down around 41%. For FY26, the pre-sales growth was also not very impressive at that 11%. Leasing around 18% is what is the growth that we saw for Brigade. The next one is Kansai Nerolac. Now, this quarter has been overall, a decent quarter for Kansai Nerolac. There was revival in demand seen as per management commentary in the decorative space. Growth drivers for new products. Growth drivers includes the new products, and that includes construction chemicals, wood finishes, as well as overall the project space continued to do well. Demand in industrial was also robust, which was largely led by the automotive space. Growth in performance coating was also strong based on the back of a strong order pipeline, but the execution is going to remain the key. And the company has announced price increase, which is partly going to offset the inflation going forward as well. So this is, how Q4 has panned out for Kansai Nerolac. Overall revenue growth at 7.5%, EBITDA growth at 30%, margins improved to 11.1%. But this is going to be, area of concern for especially margins going forward. And net profit saw growth of around 3.5%. The last one is Meesho. Strong Q4, and this was, a quarter where contribution margins saw an improvement. Overall, the Meesho Mall and Content Commerce demonstrated a strong growth, and they have continued investment in their platform and AI, which is auguring the growth for the company. Revenue saw a growth of 47%. The losses, however, EBITDA losses did widen a bit to 255 crore, and net losses came down to around 166 crore. In terms of operational performance, net merchandising volumes saw a growth of 43%, which is a very healthy growth. Annual transacting users grew by 33%, and orders saw an increase of around 45% in FY26. So this is the overall view of how things have fared for Meesho in Q4, and of course a slew of other earnings. Okay,
on Meesho though, just a tad bit expensive, huh? But
out of my syllabus, 89,000 crore market cap, 255 crore EBITDA loss in a quarter, so out of my syllabus. So she was talking about oil sensitives. I think Pidilite is one thing you can watch out for. Pidilite, I think they are like that day, incidentally we discussed Marico. Pidilite result is today. And I think if oil falls, right now it is 102, I hope it falls below 95.
But
the second hope of the day,
we went below 100 briefly.
Yeah, yesterday. Yeah. I hope it would have stayed there, but again there is some statements. So 102.
No, but okay. Just on that point of hope about crude, what is the factual situation in the world? Crude was at between $76 and $80 a barrel before this started. This is a choke. It's not as if crude has disappeared, right? Yeah. This choke will end, crude will flow, those prices will come down.
Yeah. So basically that's what the call we have to take, right? And so that's what so for example, as I keep saying, I put it into two buckets, and both buckets you have to buy best companies. So something which is not impacted by all this, Bharti Airtel, you keep it. Something which is impacted by all this, like Grasim, Ultratech, Pidilite.
Were you excited by hearing that Kumar Mangalam Birla is now going to be non-executive chairman? Because the street did seem to, bring
in
that
Vodafone,
in. In Vodafone.
See, for example,
But he's non-executive chairman.
I know. So the point is that, see, if banks want to lend to Vodafone, right, they will need more assurances, right? And so they will need more money infusion from promoter. Kumar Mangalam Birla himself coming is a good comfort. There will be many other comforts which Vodafone will have to give to lenders.
So 31% up in the last 1 month, so some comfort there. Shrikant Chauhan, very good morning to you. Just about a minute or so to go for the pre-open. Do you want to give your levels after the opening rates and go with your calls first?
Yeah, I would like to roll with the calls first. Good morning, everyone. So I think, see, the market has broken its important level and everyone knows that now the market has started gradually moving upward. So it is better to focus more on trading calls. The number one stock that we like is Delivery, and we saw buying interest in all platform companies in last 1 month. So Delivery looks good at current levels around 470, 471. There we have a target of 490, 500, and we can keep a stop loss around 454 for the same. The other stock on which we are bullish is APL Apollo. There we are seeing good double bottom sort of formation. And after hitting the levels of 1850, again it is rebounding. So most of the time, whenever the stock has fallen to 1850, 1860 sort of levels, we saw buying interest. And this time also, we are of the view that the stock is heading for 2000, 2050 in the near future. And it's a buy at current levels with a stop loss very close to 1870.
APL Apollo breaking out after a time. On Delivery, viewers, just keep this one thing in mind fundamentally, that Amazon has launched its own delivery services for self and others in the US. And if this succeeds, the pilot model, they might bring it to India. That is the belief amongst fundamental watchers. And that could be a big negative for Delivery, but maybe that's 6 to 12 months away. So for now, from a trading perspective, Shrikant could well be right. Just keep this at the back of your mind. But it's 9 a.m. And let's get the first rates on the screen to just show you what the Nifty, what the Bank Nifty, for example, or some of these high newsmakers are doing on open. We have a start which may be constructive, so that is one good thing. A lot of large caps in focus, from a Hero MotoCorp to a Bajaj Auto on the two-wheeler side to an HDFC Bank to a Shree Cement. All of them have some of the news flow to them. Then some high-frequency movers, the likes of Paytm and PB Fintech, which have come out with results. And in PB Fintech's case, the results looked solid. Paytm, I don't know if there's a 10% uptick there or not. PB Fintech too, good numbers, but I don't know about a 10% uptick. But you can get the flavor. The street seems to be liking some good numbers on a day when the mood by and large is okay. Also keep an eye out for the oil sensitives, the likes of Interglobe Aviation, the likes of the oil marketing companies, and all of them could be in focus this morning, guys.
Very interesting, yeah. Looking at the first tick, 0.2% higher, 0.25% higher for the Nifty 50, you'll take it. After that substantial run-up that you saw yesterday, I want to also pull up the Nifty Bank just to see what the initial ticks are if we possibly can. And once again, reiterate, and actually I want to ask Shrikant this because after yesterday's move, when we were talking about a trigger at the start of trade yesterday, on the fundamental side, it's being seen as that ECLGS 5.0 announcement. And we saw 2.6% pop on the index level, with PSU banks also doing particularly well. It was the top gainer. Would you buy into that, Shrikant?
So in that particularly, if we go through with the PSU banks, then see, like most of these stocks have fallen sharply from their immediate highs. And now when the recovery is there, it is quite like we can say not that convincing. But yes, a few companies like I can say State Bank of India, which are leaders, I can say, in that particular space. State Bank of India as well as Canara Bank. I think this stock should do well. In that, we like currently only State Bank of India because the recovery is relatively better than other stocks. Currently, it is around 11,080, 1100 sort of levels. But from here, the stock can gradually move towards the levels of 1170, 1180, where it has good amount of resistance. So between 1200 and 1170, the stock is having resistance. So I'm not expecting stock to cross all these levels and go rapidly to the newer levels. Not that is not possible. We are of the view that it is going to consolidate within the range, but at this level, certainly it's a buy because the risk-reward ratio is quite favorable.
Okay, what's happening in the pre-open session? Look at Paytm. So the UPI incentives are not coming in. Optically, some of those operational metrics were muted, but that conference call has enthused the street. And the numbers were at its core good, 6.5% up in the pre-open session. PB Fintech we've talked about. Look at a Bajaj Auto. 12,000 rupees is what the company is offering for a buyback. Should you buy back? Parag Thakkar says no. Hold on. 5% up. Even possible to look at new positions coming in. Hexaware Tech is also about 4.5% up. Decent set of numbers. Since we were talking about Meesho, we should just look at what that stock is doing as well. After its results, about 3.5% up. Operational losses have come down. The management also talking in detail about how they're using AI in their entire interface and how a majority of their code is now being written by AI. I think these are metrics the street will start looking at. On to our big brokerage call of the day. Citi has initiated a buy on NTPC, Power Grid and JSW Energy. Sharad Dubey tells us more. Sharad, how is it being back in Bombay?
Well, yes, it's a pretty good coming back, but definitely there was a lot of sentiment and, I could say hope in West Bengal. But coming back,
one second, Sharad. I hope you brought back all of that jhalmuri and some sweets for the team after your 2 days in Kolkata.
Well, yes, as promised, Sandesh is here and we will be having that.
Okay.
But coming back to the brokerage call, Citi on India Electronic Utilities has come out with its report for NTPC, Tata Power, Power Grid and even JSW Energy. You can see all of the 4 companies initiate buy ratings have come in and they have stated a very important point that this is India's first ever multi-vector capex upcycle. That's a very big statement coming in from Citi and it's a multi-year visible story with the breadth of power demand gradually going to expand. Let's talk about the numbers also here. The medium-term forecast is at around 5 to 6% CAGR on the strength of electrification, data center, cooling load and the policy which is supporting these manufacturing sectors. And let's take the order of preference from the broking house. First is NTPC, second is Tata Power, followed by Power Grid and JSW Energy. Of course, these stocks have re-rated, but there is a further up move expected in most of these stocks, especially on the transmission and distribution space. That's where the bullish commentary is coming. But net, we have for the last 1 month, we have already seen the power stocks already rallying with a lot of brokerages turning bullish on this theme.
Electric utilities as a bullish take from Citi. Any views here, Parag Thakkar?
No, so I like regulated ROE businesses, conventional like NTPC, Power Grid and all those things. JSW Energy, anybody who has a long-term agreement with the state electricity boards and gets a regulated ROE, those kind of businesses are good. This time summer is very heavy, so power demand is expected to be good. But I would say that stocks have rallied also. So it might be overstretched.
Okay. We were talking about the transformers companies earlier today and talking about how they've disappointed in Q4. And what would you say right now? Because they've almost all of them fallen off a cliff, right?
If you would have asked most, I would say, I would not name that company, but the most respectable company in that space, when I was talking to them, they were saying that we are surprised that we are making so much money. The 20-21% margins.
Now you have to tell us which company.
No, it will not be fair for them to.
Okay.
But I would say that they were actually surprised. A transformer company does not make 20-21% margins all the time. So this time there was a disappointment in margins. So stocks got. So this is a problem with the market. Market extrapolates good things. Market extrapolates bad things.
So it's not replicable, you're saying?
No, according to the companies whom I speak to, those kind of margins were one-off.
Okay.
Yeah. And like we said, I think it's exacerbated simply because of the Middle Eastern issue as well. Transformer oil prices are expensive right now. In fact,
yes.
People are now floating names that the companies which are making this transformer oil, there is a stock called Savita Oil, if I'm not wrong, which is doing this.
Yeah, no, so Apar makes it.
Even?
Apar.
even Apar makes it. So those are the names that people are now looking at, and no surprise that these stocks have done well. But yeah, the transformer stocks are definitely getting hit.
It's actually the polar opposite of what you've seen with the transformer stocks, right? Where they've fallen off the cliff. Savita has done particularly well.
Yeah,
but transformer oil can also correct. So
yeah.
What are we thinking about Paytm?
Difficult. But
the expressions from Parag Thakur. Look at the stock. Vijay Shekhar Sharma is so confident.
No. So basically, I feel that it is out of my circle of competence. But yeah, operating metrics seem to be in right direction.
Yeah, but the fact is that the UPI incentive is now dwindling down.
Yeah. So no, I don't understand that business so well. So let me be very honest.
Okay. So you're saying you would stay away for now.
I don't understand it enough.
Okay. What about on charts?
Nothing exciting really. I mean, it's consolidating in a range. It got multiple resistance levels, plus any kind of cap-up opening will, I think, be taken as an opportunity to exit. 1150 itself is a resistance opening there, just above about 1175 also. So unless you have a strong breakout above some of these levels, Paytm, I'll also club Eternal in the same pack, by the way. Unless you have a big breakout volume backed one in some of these names, I think they could just consolidate for some time.
Actually, that's a really good point that Kush is making. And Shrikant, I want you to come in on this as well. Paytm, maybe PB Fintech, Eternal, Swiggy to baat hi bhul jao, but they are all not able to show any kind of a bump up or a breakout now for a number of weeks or months, if you will. Are they therefore in a no trade zone until the trend changes?
So say like Neeraj, we have seen good amount of rally during 2024-25. Now they are into corrective mode. So in this corrective mode, they are going to spend time. That is very clear, as Kush said. But one thing that we cannot forget, that they have already fallen to their extreme levels in last 2 months. Now they are rebounding from those levels. So pullback rally is on. On every dip, I can say we should look for taking some long bets on these stocks because it's a pullback, and this pullback is going to continue for a longer time. So gradually we can see the levels of 300, 320 on Eternal. For delivery, maybe 500, 520. And for Paytm, again, the stock can move towards the levels of 1200. So maybe 1250 sort of level. Broadly, I am of the view that we should be, in fact, a trader in these stocks on every dip, because now they are going to form the what I can say, the series of pattern, that is higher top, higher bottom. And in that specifically, we like Eternal.
I do want to talk about Godrej Consumer because we highlighted that stock, and the view is that it was a mixed quarter, but more negative than positive. And more than anything else, the outlook for FY27 is looking a little clouded, particularly on the margin front. So to you, Parag bhai, if you're talking about the entire space, there are a few stocks that you like.
Yes.
What is the view on GCPL though?
So as I said, Godrej Consumer in soap business, they use palm oil, right? And palm oil prices also go up in line with the crude oil price. So the outlook for the margins will be slightly, plus Indonesia, this quarter also the problems continue. It was a negative growth. So I would say that yes, it is not as exciting as Marico or Pidilites of the world, in my view.
Okay, so it's an avoid, and if you have it, perhaps get out while you can.
But the stock price is also corrected, and it has corrected today. Today also it will correct.
Yeah.
So now I think it is not a time to to surrender, I would say. Now because stock has also corrected.
Got Kush, if you have a relatively shorter time frame in mind, and of course this is from the lens of a fundamental investor, right? What would you do with the stock? What levels would you watch out for?
Yeah, I like the option that you mentioned, that if you do have a position, it's not a bad idea to move out now. It's run up just a little bit in the recent past, but it's also starting to see a weakness, profit booking. So not a bad idea to exit. 1040 is a strong support zone. If that is broken, the structure will weaken further. So yes, I mean, if you do get an exit at open, great. If not, maybe at least put your stop losses around the 1040 mark.
Okay, well, so FMCG blowing hot, blowing cold a few days, one day up, down the next, so it's a difficult one to maybe trade as a piece. The other one to look at is Meesho, and I wonder, there's not too much chart detail available, isn't it, Kush? Okay, let's leave that out. So Kush, let's try and figure that out maybe 2 minutes early. Why should we always ask you about your top call in the last 10 seconds? Pre-open rates have settled. If you had to bet on one stock for a trade today, Which one would that be?
It'll be Gabriel India. It's got massive volume accumulation in the last 3 sessions, 200-day moving average crossed in the last couple of sessions. And despite everything happening, the auto angst, I still remain bullish because the price movement, at least for now, is showing that. So I will continue that positive stance on Gabriel India. Just to reiterate the targets and the stop loss, 1115 and 1145. These are your targets. 1055 is where you keep the stop loss.
You've actually disappointed Kush because he enjoys that challenges, by the way. But having said that, let me throw it across to Shrikant Chauhan as well. Do you have a pick from after the pre-open rate that is different from what you picked for us at the start?
Yeah, I think select today we have to focus on auto companies. There also we can see some continuation of the previous up move. In that specifically we like Ashok Leyland, which is currently around 166, 167 sort of levels. If we consider its overall technical pattern, then on long-term charts the stock is showing a lot of strength. And yesterday the stock has formed higher bottom sort of formation. So from here again the stock can gradually move towards the levels of 180, 185 and eventually maybe 200 plus. So it's a buy at current levels. Risk reward ratio is quite favorable. We can keep stop loss around 164 for creating any long position.
I just want to quickly bring to notice, and this is something Prime Minister Modi has just posted. He's talked about how this is a year since Operation Sindoor and how time flies and how much we saw coming out from our country in terms of a response. Here's what Prime Minister says. He says, a year ago, our armed forces displayed unparalleled courage, precision and resolve during Operation Sindoor. They gave a fitting response to those who dared to attack innocent Indians at Pahalgam. The entire nation salutes our forces for their valor. Operation Sindoor reflected India's firm response against terrorism and an unwavering commitment. No doubt a big day to remember. Also a day, Neeraj, which stood out, or a time which stood out for the coming of age or coming to the forefront of Indian defense companies and Indian indigenous defense prowess.
Yeah, I couldn't have placed it in a better fashion. Most certainly, a proud moment for so many Indians to see what the Indian Armed Forces could do with precision in modern day warfare. But let's focus now at 9:15 on the markets, starting off reasonably well, about 0.25% higher, with not much support from the banks, by the way. But the broader market's doing well because the advanced decline ratio is looking very, very solid. Mid-caps 0.5%. Small cap index should come up on your screen, up 0.65%. By the way, with this, is the mid-cap index at highs? I think we'll just get that checked. But the small cap index too doing really well. So good going at the start for the market. Let's get the heat map up on the screen and show you what's happening at the large cap end of the market first. Fair degree of green, very little red. Let's start with the green first. Bajaj Auto on Q up about 1%. Trent, interestingly, up 1%. Eternal is up about 1%. No rara moves, if you will, in any of the stocks. A rising tide carrying some of the lightweight stocks up in trade. We are not seeing the heavies participate except for State Bank of India, which is in the top 10. But you can see M&M after the results and the commentary that they've given having a good move per se. But yeah, that's about it really from the gainers. On the losing side as well, Power Grid, Kotak, maybe a Titan, Reliance is in the red. So keep that in mind. And HDFC Bank is not quite celebrating the clearance of that overhang. So yeah, long and short of it, the large cap move kind of muted, Tamanna. Broader markets, I'm sure, are rip and roaring.
I won't say rip and roll. I think it's a very careful market, right? Because again, we've talked so much about hope, but then do you want to bet on hope is the question, which is what you're seeing in the range coming in. I want to just pull up the advanced decline ratio. We'll pull up the VIX and then we'll pull up the broader indices as well. VIX is okay, steady, about % down. Advanced decline ratio is positive, 1813 to 335. So that is showing that at least bulls are in charge, but no rocking moves. Even the mid cap and the small cap. Let's just pull up the mid cap and the small cap. 0.5% up on the mid cap, 150. That's decent. That's positive. Thereabouts on the small cap, 250 as well. Let's look at the sectoral heat map and look at what's moving there. You have enough of red on the screen. Small cap 250 is actually your biggest winner. That's fantastic. Media stocks are up. Interestingly, we should pull up Sun TV. Even as it's not clear when and how and in what form and fashion the Tamil Nadu government will emerge, because at the end of the day, there's no party which got a full majority. you've seen Sun TV slowly coming back up. So interesting how that's become a proxy for Tamil Nadu politics. But let me just go back to the sectoral heat map if we can. Thank you for that from the graphics team as well. The healthcare stocks are doing okay. So is pharma. Defense is also showing maybe a sentimental uptick. FMCG a little muted, but overall I would say look at the range. Your top mover is less than 1% up, and your bottom mover is but just about 0.25% down. So very narrow, tight range of trade today. Individual stocks is where the action is. So a lot of it around results, actually all of it around results today is what I'm picking up. Paytm, Hexaware, Birlasoft is what we're looking at. Paytm, decent set of numbers, confident management, 4% up right now. The only cloud in the sky, of course, is that UPI incentives from government are beginning to grind down. Hexaware Tech was actually a robust set of numbers, but the stock has run up as well. Birlasoft, on the other end, was a muted set of numbers, but you're seeing that stock about 1% up right now. Let me look at Brigade, PB Fintech and Godrej Consumer in that next list. Brigade Enterprises was weak. Godrej Consumer was also weak, and the fear of palm oil prices going up with crude and hitting margins is very much there because they make soap that needs palm oil. PB Fintech, also good set of numbers, not that much of excitement as we saw in the pre-open session, to be honest. Shree Cement, Misho, Blue Star is the other set that I'm looking at, and quite a few here to cover today. Shree Cement, good set of numbers, 3.5% up. Misho, the losses are there, but they're reducing. That's 6% up. That's doing well today. Blue Star, a little muted as well. So you have a lot of result reactions coming in, but not too many that are popping, Alex.
Yeah, but a few stocks in the broader markets that are doing particularly well, and that breadth continues to hold. It's not worsened too badly. In fact, a very strong market breadth at this juncture. The question is, do we hold on to that? And by the way, the Midcap Index, the Midcap 150, having hit intraday a fresh high, and that's something to talk about, right? Even as we have geopolitical crisis that is not dissipated, even as you have challenges on oil, you have a significant comeback in the mid-cap index that took place in the month of April, as much as 13% and a further 2 or 3% or thereabouts in the month of May, and that has taken us to fresh highs. But a few stocks that stand out: Aditya Birla Lifestyle Brands is up at about 7% or thereabouts. Aptus Value is doing well today. Affle is up and about. Shree Cement is up and about 3% each. And very interestingly, from my perspective, and something that if I remember correctly, Kush called out earlier in the week, is J&K Bank, which is up about 3.7% as things stand right now. If I remember correctly, this was a call earlier in the week, wasn't it?
It's been a call for about a month now. The stocks, it's consolidated way too long, but the breakout also was equally strong, and hence the conviction. I've said in the past, 150 on this one, positionally very easily achievable. I won't be surprised for this to actually go beyond that as well. That's the kind of setup and that's the kind of momentum there is. Despite having run up quite a bit, if you see the weekly setup, the accumulation in the last 2 weeks, very healthy. So if you do have a position, my suggestion would be continue to hold. Keep a trailing stop loss around the 125, 130 zone now.
Okay, some of the other stocks that I mentioned, Shrikant, and I'm going to list them out for you again. Aditya Birla Lifestyle Brands now climbing even further, 7.5% higher as we speak right now. Aptus Value building on those strengths as well, 6.4% higher. Let me throw in J&K Bank and get your view on that as well. And Paytm up about 3.3%. Which of these would you trade?
Yeah, I think so. Like in this particular basket of stocks, if we have to really select any one or two stocks, then I think we can go for very first, that is J&K Bank. Even at 141, 142, the stock is showing a lot of momentum. And whenever like we have seen any specific momentum sort of stocks in such type of sluggish market, there we should look for taking some trades. And stock is now very close to its immediate highest level of 144, 145. So on the dismissal of that, we can see the levels of maybe 155 sort of level. So certainly even at this level, it's a buy. The other stock on which we are bullish is Paytm, but currently it is very close to its resistance level of 1150, 1160. But eventually the stock is heading for the levels of 1250 sort of levels. So there also we should look for taking some long bets.
Okay. I'm just wondering how we are looking at some of the auto pack. Shrikant, are you bullish on a Bajaj Auto? How do you look at that buyback, if you have a view there, and any of the other auto pack right now? Or do you think that auto run that we saw last couple of days will cool off now?
Again, we have to be very selective in the auto space. Bajaj Auto, Hero Motors, I think they are currently participating into the upward activity of the sector. But eventually, Mahindra and Mahindra, Tata Motors Commercial Vehicles, and TVS Motors, I think these are the three stocks which can do really well. From here, the Mahindra and Mahindra can move towards the levels of at least 3550, 3600. So we are recommending these stocks with a positional point of view. We also like TVS Motors. It has formed good base close to 3300, 3400 sort of levels. And from here, the stock is again heading for the levels of 4000. In fact, this one is the most outperforming stock in this particular space. And if we consider its overall technical pattern, then I think it is heading for the levels of maybe 4,400 or 4,500. So it looks really strong candidate to buy for. And from the Tata Motors space, I think instead of focusing on Tata Motors passenger vehicle, if we focus on Tata Motors commercial vehicle, then I think gradually we can see the levels of 500. But for Hero Motors, Bajaj Auto, I think they have reached to their immediate resistance levels, and there we should look for taking some profit on long positions.
Okay, take profit on long positions when it comes to Bajaj Auto and some of that auto pack. You're seeing a pretty decent morning though, I must say, especially in the broader markets. And want to look at a polycab as well. With everything we've seen with cables and wires and that entire space, competition, etc., polycab numbers were decent.
This
some good
continues
upgrades. Yeah. At the current levels and current valuations, you like this?
No, I don't like it, current valuations, but the company continues to do. Even RR Cable, we saw the numbers.
Finolex Cable is also doing well. The entire space is doing good right now.
Yeah. That space is doing well.
What are your favorites then?
No, so basically, not necessary, but RR Cable is something which I am evaluating. I saw the results. This quarter result was also very excellent.
RR Cable.
Yeah, RR Cable. Good results, yeah.
Okay. Hind Copper is buzzing actually. Can we pull that up, please? The intraday chart. It suddenly spiked, I believe, or rather, it has actually had a bit of a spike, 4.4%. Kush, on the charts, would you trade this or would you sit by?
I would wait just a tad bit. Although if I did have a long position, I don't see an issue holding that long position because the bias is positive. But it's gone into a long consolidation phase where, after that, very sharp run up a couple of months ago, it's just consolidating now. Again, trying to regain those 580, 590 zones. Maybe in the clear of 600, it could have a fresh run. And hence, the risk-reward ratio from here for a fresh buy is not as favorable. But if you did have a position, not a bad idea to hold. And just a quick word on something that Neeraj mentioned at the start. The small cap 250 index, by the way, is still some distance away from its all-time highs. But the mid-cap 100, by the way, has hit all-time high. So if you did have positions, in all mid-caps, you'd probably be feeling a bull run right now.
Nifty Metal is also at a record high. So you are seeing the broader markets come on. But, I want to pick up a theme that we touched upon very slightly just before we had the market open, which is defense, right? And we had that Prime Minister's post on Operation Sindoor, and that's a proud moment. Defense companies, and we should pull up the one-year chart for both the Nifty India Defense and some of the key defense players, have shown steady growth there. Do you think that story still sustains, Parag?
So basically, BEL, as I said, see, this in defense, what happens is the order books are there, the execution is lumpy, right? And so, and from that perspective, I've always seen that BEL continues to deliver and execute. And they are part of almost all the projects. So I continue to prefer BEL in that space. HAL, of course, now that GE engine problem is getting resolved, is doing well.
I want to see the one-year chart for BEL. I think it's gone up some 30-40%. HAL has been pretty standard, but BEL has seen a 41% uptake. On charts, any of the defense plays that look interesting to you, Kush?
MTAR and data patterns, although they've run up quite a bit and are right now consolidating, that's a good sign. You want to buy these stocks when they're consolidating, and you want to buy.
Just look at MTAR in the last 12 months. It's 359% up in the last 12 months.
And a large part of that over the last 1 year.
Yeah, when it was 4,700, Motilal Oswal came out with a report of 6,000 and everybody's saying you are nuts. and in 10 days, the stock went to 6,300.
Yeah.
Quite something.
Sorry, which was the other one?
Data patterns.
Okay.
So both of these, they've, as now was shown on that 1 year graph, they have strength, they have momentum. I think maybe some declines, you could consider these as buy. Even in the consolidation phase right now, you could consider, some of these names. BL is something that you buy and hold for long term. It's like the HDFC Bank of Defense.
HDFC Bank of Defense is BL. Good description. Even data patterns is doubled in a year. So I think it's an interesting story to see because of course Operation Sindoor geopolitically as something for every Indian so important, and on the other side the fact that your Indian defense companies have also come to the fore at the same time. So I think that's good. Look at the Nifty defense versus the Nifty, and the Nifty India defense segment has really performed well in that sense, and that's a broader theme that we're seeing as well. I want to thank you, Parag Bhai, Kush, Shrikant for joining us today on the show. Shrikant, you want to quickly come in with what is your top defense stock before we wrap up this segment?
Yeah, I think we should focus on HAL, Hindustan Aeronautic. In last 12 to 18 months, the stock has corrected very well from its high. And now the stock is preparing for the immediate level of 5,000 very first, but eventually the stock can even cross its previous high. So I'm of the view that the stock is really showing a lot of strength and momentum. And if it is going to cross its previous high, that means the defense theme is definitely going to do well in the next maybe 6 to 12 months of time. So we should be buyer in defense, maybe ETFs or basket of stocks, but broadly we should be buyer in stocks like HAL very first and Bharat Electronics.
Okay, Bharat Electronics and HAL on your radar. Shrikant, thank you as well for joining us today. Let's talk about Gallantt Ispat. They've reported a mixed Q4 performance with revenue growth driven by higher volumes and capacity ramp up. Before we speak to Mayank Agarwal, CEO at Gallantt Ispat, Varsha joining in with more details.
Well, talking about Q4, yes, there was a revenue growth which was led by, volume spike and capacity ramp up, but there was a margin pressure. This was due to, higher raw material and input costs, and also increase in finance costs impacted the net profit. Talking about the growth strategy, the capacity expansion target stands at around 12.3 lakh, million ton. Rupees 1,500 crore has been allocated for mining integration, and 300 crore is in plan for solar power expansion. Lastly, on the capex program, total capex stand at around 3,000 crore is being executed over the next 2 to 3 years. So yes, triggers are playing when it comes to the Gujarat debottling, and India steel outlook also remains robust. But yes, margin pressure is one of the key things, which has led to the steady or I would say a weak performance.
Okay. Well, Varsha, thanks for that. Let's get in Mayank Agarwal, the CEO of Gallantt Ispat, on the show. Mayank, great having you. Thank you so much for taking the time out. This is Neeraj Shah here. Good morning. And as I read your presentation of the earnings presentation that you guys have given, what stands out is that you seem to believe that this is a decade of structural demand and not a cycle, which is very counterintuitive to how metals have behaved per se, right? It has always been a cyclical product. What gives you this confidence, and where, according to you, are we in that cycle?
So a very good morning to you and to your viewers, and thank you for having me here. So why we say that it is structured and it's going to sustain is that we are primarily into long products, and which is governed by the domestic demand and supply scenario. And with the kind of infrastructural push that we see, particularly in India and also in the addressable market where we are, which is Uttar Pradesh and Gujarat, we see a very robust spending on the infrastructure, which makes us believe that it is structural and it is going to sustain.
So here's the question, right? If I look at what you have done, Mayank, let's say, and I'll use a simple statistic, I'll not use cash flows, so on and so forth. But if I look at what effectively you've done in terms of revenue growth, EBITDA growth, etc., because those are the two key parameters that you want to look for a structural demand play, the numbers should have looked different from what they are looking from FY23 to FY26. You were at 4,057 crores March 2023. You are 4,400 crores growth, but okay. Even on EBITDA front, 3,700 crores, 3,693 in March FY23, 3,700 crores March 2026. What's happening?
So I will explain that in detail to you. When we talk about the volume growth, so the last year we defined the plan of the capex, which your rep was also talking about. And the capex investment started in FY26, which are bound to be completed in the FY25, which are bound to be completed in FY26 in H2. So the volume growth would be coming from that, as currently the installed capacities are pretty maxed out with the capacity utilization at about 86%, although we are targeting to achieve that beyond 90% in the ongoing financial year. But the volume growth would be coming in from the capex on the capacity addition that we are doing. If we talk about the EBITDA per ton and EBITDA overall, there has been a substantial jump year-on-year basis. I mean, where our per ton EBITDA in the last 4-5 years has reached from about 5,000 rupees a ton to the FY26, which is currently 8,800 rupees a ton. That is 17.33% year-on-year basis. So I believe that per ton EBITDA of 8,800 is pretty remarkable as an achievement for the company on a long product.
Mayank, very good morning. Tamanna and Amdar here. Just trying to understand how you see the direction for the EBITDA per ton, because I believe there's this debottlenecking that you're doing in Gujarat right now of your upstream operations. Will that significantly improve your EBITDA per ton metric?
Definitely. Currently, with the total 3,000 crore capex, 1,200 crores is going into capacity addition as well as debottlenecking of the upstream projects, especially products in Gujarat, where we see some improvement that can be done. So the capex is already on way, and it will all be completed in H2. So for the second half of the current financial year, we'll see the impacts coming in for that. Besides that, the 1,500 crore capex that we are doing in the mine development, which is scheduled to be completed by FY28, that is 2 years from now, wherein both the units completely will be fully integrated with the mines, and it would make an impact of at least 2,000 rupees a ton on the EBITDA. So while we are driving the volume growth on one side from 1 million ton to 1.3 million ton, which is 30% in the current FY itself. And it's not a long story that we are talking about. It's a short-term thing that we are talking about.
Describe short-term, please, Mr. Agrawal. When you're saying short-term, what is the time range?
So short-term is all this 1,500 crore investment on upstream debottlenecking in Gujarat, and capacity addition would be completed in H2 itself. So certain units would be commissioned in Q2, certain would be in Q3. So Q3 onward, we will see the complete impact coming in. And going forward, with the mines kicking in, it will further add an EBITDA to the company. So overall, the margins are going to be improving definitely substantially, while on the other side, we are already driving the volume growth.
Let me just come to you. Sure. Let me just come to you on the margin point when you say improving substantially, because your margins did get squeezed by 200 odd basis points because of raw material impact, I suppose. Wouldn't that be affected because of West Asia crisis, etc.? What is the margin picture that you're seeing because of the two opposing factors, right? Raw material and import costs or input costs at one end, and then the debottlenecking that you're describing.
So while in the metal industry, we are all aware that the realizations are not in our hand. But having said that, what we can best do is to optimize our cost efficiencies to drive the volume growth, which would ultimately, definitely over a longer period, improve the EBITDA. So EBITDA, when you compare even with Q3 to Q4 in FY26, Q3 was about 7,800 rupees a ton of EBITDA, which has jumped to 8,800 rupees in Q4. And the overall EBITDA also for the entire year has jumped by about 6 to 7% in FY26 when we compare it to 25. So on a year-on-year basis, over the last 3-4 years, we have substantially improved our EBITDA margins, and we continue to do so. And that will definitely improve our EBITDA in the long run. Obviously, in the short run, currently with the raw material prices pressure due to various geopolitical issues will impact in the short term. But in the long term, we feel that driven by the cost efficiencies and the kind of infrastructural spending that the country is doing, we are very well positioned in the two main markets, which is UP and Gujarat, to encash the same. Also, not to forget here, which is very important, I would like to mention, is that the company is completely net debt zero, wherein there is no term loan.
Sure.
And in fact, in the last quarter, we have had some earnings from on the interest side.
Okay.
And this entire capex is being funded internally.
Okay. But I do want to ask about that actually,
on the working capital expense.
Sure.
Yeah.
I do want to ask about that because that was going to be my question on the finance cost. Because if you look at that line item in the P&L, that seems to have, to a certain extent, affected the bottom line. So therefore, is that, as you describe, working capital led? Seemingly it is. And while you're setting this up and you're undergoing this debottlenecking, do you expect that that's going to be a little bit of a wobbly sort of a thing or a volatile sort of a thing till things settle down over FY27?
No, I don't think so really. Because, yeah, the 5-10% here and there, but not substantially.
So therefore, you don't anticipate that finance. So will you say that will finance costs be more or less in this range in FY27 as well? And you're likely to see net debt zero as well?
Yes, net debt zero. We aim to continue the same because the current capex are already ongoing, as I said, and they are already planned, and we will. Most of it we will meet out from the EBITDA.
Okay. Just a last question, Mayank, and I think this will encapsulate quite a bit because you've described that your margin performance will be better in the second half as a lot of those tailwinds kick in. But if you look at FY27 as a whole, would you say that your earnings are going to be volume-led or margin-led?
It will be on the both sides, majorly volume-led, because in terms of upstream, it's only Gujarat where certain improvements would be coming in at the back end, but broadly volume growth because the entire 1.3 would be commissioned in H2. So we'll get the half-year benefit there.
Fantastic. All right, Mayank, absolute pleasure speaking with you. Thanks so much for taking the time.
Thank you for having me. Thank you so much.
All right, KPIT Technologies is what we're talking about next. It's posted its fourth quarter results, but it's actually missed estimates and the stock reacting sharply. Let's go across and in fact hand it over to Hiral, who spoke with the management. Hiral?
So as we know, KPIT Tech has posted, pretty inline set of numbers, but I think there is a miss that has come in when you talk about the EBITDA front for FY26. In terms of the constant currency growth as well, we're talking of a number of 1.8% on a sequential basis versus a 1.5% what the company had achieved in the third quarter of FY26. In fact, they've announced an initial investment of $10 million in Simotive. So that's going to be one of the other talking points. And the FY27 guidance has been lowered on the EBITDA front at 20.5% from a 21.2% as well. Kishore Patil, MD and CEO at KPIT Tech, joins in. Kishore, welcome to the show. Always a pleasure to speak to you. My question coming to you is, you've ended FY26, I beg your pardon, with an EBITDA margin of what? 20.8%. Missing that 21% margin guidance. I know it's a marginal miss, if we can say that. What have been the specific headwinds in the fourth quarter that has led to the slippage? And were there any one-off costs or any structural shifts that you saw?
The first thing is, I think during this quarter, we have been talking about investing into multiple areas. And one of the areas which we have been investing into is AI, and some of the R&D investments we wanted to scale up. I think our R&D investments from about 3%, we have scaled up to about 5 to 6%, depending upon that. That is one reason why it has, to some extent, been in the range, but a little bit less from that perspective. The second thing I would say that the acquisition expenses have also hit to a certain extent in between. So with these two, actually, it is in that range. I think it's something which we have talked about last quarter. Similarly, it is in the range what we talked about last quarter.
Okay, so let's look at FY27 then, because the guidance of 20.5% to 21.2% is slightly lower if I have to look at the bottom end than the previous expectations as well. Does this range actually account for further integration costs of Cymotive, or is it higher than expected R&D for AI?
There are two reasons for this. First is the currency movements have been really very unpredictable in the recently. I think if you really look at it, has really a significant impact on EBITDA as well as profit. So we don't know how the currency movements will happen. We can talk about constant currency. It's more complex than that because there are multiple currencies come in as we are well spread across the three geographies. That is one point. The second is we will continue to invest into this, and basically we say that it could be more than 21.2% also. So it really depends upon how the things scale up. So I think at the end of the year we are pretty confident it could be higher on the basis of higher revenues and etc. That's what we feel. Also, in the medium term, we believe that profitability will be much higher than this.
Okay, so going ahead, profitability is going to be the key from here on. Now, if you have to look at the two major SDV programs, they also end in the first half of FY27, Kishore. And this probably there could be a significant revenue hole that the company will have to plug on the back of this. So if you could help us understand what's the kind of revenue contribution that these two programs have had in the fourth quarter, and do you have enough, shelf-ready projects in account to ensure that the sequential growth does not dip in the first half?
So there are, I can only answer in two ways. One is we have given one statement which says that had it not happened on this side, we would have grown 4 to 5% every quarter on quarter next year. So it shows it's a significant part. At the same time, you can see that the wins for us in terms of 349 million, again, one of the strongest quarter in terms of deal wins recently, as well as a couple of large engagements we announced. And of course, the discussions we are having across, I think that gives us the confidence that it will substantially, make up for this. So of course, we are saying that we will grow. How it will pan out every quarter, how actually some of these deals will, impact us as well. Some of these are basically depends upon the actual modalities of every project. So that's why it cannot be 100% set. That's why we have said that the first half may be softer. And at the same time, we are saying that we have been in a position to make up for this. So otherwise, the growth would have been 4 to 5% this year. So it means that the wins in the other part of the business they are strong.
Got it. So if you have to look at it from a business perspective, Kishore, with the pivot that's happening from a linear service model to a 50% non-linear solution model is what we are seeing, right? So is there any cannibalization happening when it comes to traditional services for AI-infused solutions? And if so, the kind of impact you could see when it comes to your revenues per employee or even the long-term contract pricing?
So 2-3 things I would say that the first thing is our revenues per person have increased consistently over last 4 years, and we expect it to continue to increase in next few years as well. So revenue per employee will keep on going. So I think that will be there. We actually believe that the overall pivot we are having in terms of solutions and product actually will be it will be accretive in terms of margins. And as the share of products and solutions will increase in the overall business, the margins will improve. Actually, that is one of our major levers. And from that perspective, one of the thing in terms of solution is you take the ownership. So actually, you expand the scope. And even in case of the AI world, there is a lot of integration requirements and possibility. Specifically in case of our area, R&D, there is much more deeper engagement required as an integrator, because you have solutions, you have products, but you also need what you call a deterministic output, which cannot come out of modeling. There is an infrastructure requirements and the whole integration of the whole system to ensure output. So I think that that's why we see a relatively less impact in our vertical.
So, Kishore, an interesting point that you made about AI as well. Let me pivot to the acquisition that you've made, which is Cymotive, if I'm pronouncing it correctly. Why is Cymotive chosen specifically when it comes to the AI-led cybersecurity strategy over developing these capabilities in-house? Because your R&D spends are also usually on the higher side. So why this one, number one? And two, the specific revenue or EBIT hurdles that the company will have to actually clear to hit that upper end of the valuation in terms of the acquisition, and what's the impact you're seeing when it comes to the EPS over the next 2 years?
You have asked multiple questions, so I will start from one by one. First, it will have no impact on EPS for next few years. Actually, it may just improve some revenues, but we don't see any impact, because the way we structure the deal, till they hit certain milestones, we don't consolidate it, but we still get some benefit in terms of what KPIT as an independent entity would deliver. So I think from that perspective, it has no impact in the next 2 years. Basically Cymotive, one of our key customers and and Carrier, which is the software arm of Volkswagen Group, is a important stakeholder. And the ability of Cymotive to really include their solutions in millions of vehicles there is the really critical thing for us. And the reason we are saying is in the world of AI cybersecurity becomes more important, as well as what KPIT builds the solutions, cybersecurity will become more important. Overall, if you look at the software-defined vehicle concept, now it is becoming more AI-defined vehicles. So having this kind of a cybersecurity expertise across the value chain, across the V-cycle will be very important. I think that's what we are looking for, providing these solutions to our client.
Okay. And overall, if you have to look at the growth that is coming in specifically from commercial, which is the on and off highway segments, was the growth in the fourth quarter also driven by this segment? And how are you seeing the passenger vehicle segment, develop from here on? Because there is commentary saying that there is a prolonged slowdown that is probably on the cards.
So there are 2-3 things I would like to say. I believe passenger car segment, the overall spend will increase. It could be specific to a certain OEM for a certain time. But if you take a medium term, it is the overall increase is a clear trend. And the only thing is there is a shift in the spend. What I mean is, I think many people think that by reduction spend, which is also not true, but in certain parts of the world, reduction in the spend of electrification will mean that overall spend will go down. That is not the fact. Actually, the spend is increasing multiple areas, but to name 2 most prominent is autonomy, and the second is the digital cockpit. So these are the areas. So the spend areas are a bit shifting, I think, and we see those trend. And if you look at some of our wins, which we have talked about, one of that is the digital cockpit and the experience part.
All right, that's an interesting conversation, but something about the first half not looking good is a template that the street doesn't like. We've seen that in enough earnings this season. KPIT is no different, down about 5% in trade today, and arguably the stock of the morning, but for all the wrong reasons. 709 and counting. Okay. We are in the midst of the earnings season and a host of earnings expected today. Our research team is standing by to list down the key expectations. And Mahima, let's start with Dabur because FMCG is right up there. What is it that the street is working with? What is the one thing to watch out for according to you?
Right, so Neeraj, overall, when the Q4 business update came out for Dabur, right, it was the expectations seem to be largely in line with what the estimates are looking like, and EBITDA growth will be growing ahead of revenues. Revenue may see a rise of around 7.5%, EBITDA also around 7.7%, and net profit may see a growth of around 10%. Q4 business suggested that there is going to be mid-single-digit revenue growth. India FMCG demand seen growing at high single-digit rate. Home and personal care to grow in mid-teens, and international business will be hit by the Middle East tensions. Operating profit to grow faster than revenues. Now, key things to watch out for, I think for Dabur, the one key thing that we'll be watching out for is to how the new CEO, that is Harjit S. Bhalla, is going to take it forward from here, because we've seen in the last year how new CEOs and CFOs have reshaped the landscape of a lot of FMCG companies. So that's something that I'll be watching out for, especially in Dabur.
Okay, Mahima, what about Britannia then?
So for Britannia, the view is that overall revenue may rise by around 10%. EBITDA may see a growth of 15%. So this counter is going to be performing slightly better than its peers, and net profit may see a growth of around 18%. Gradual improvement in volumes can be expected, but going forward, I think it will be important to see as to how price hikes and calibrated price hikes is what Britannia takes, because Britannia is very careful when it comes to taking price hikes because they don't want their volumes to get impacted. Plus, overall, I think margin outlook will be something that we'll be watching out for, considering that if they take price hikes, how will that impact their margins? So in terms of Britannia, I think the other thing that is expected is here also the EBITDA is going to grow faster than the revenue growth, and that's something that we'll be watching out for as well. So this is the overall view of what you can expect from something like a Britannia as well.
Got it. Okay, Mahima, thanks for that. Now, Bharat Forge is the next one, set to announce its Q4 numbers. Puneet is here with the key expectations. Puneet, we know that the recent Class 8 truck sales have looked solid. Can they, but that's for the month of April, can the March quarter live up to the rise in the stock price?
Well, thank you for that. Just 4 key points, and as you rightly mentioned, one of them is the Class 8 truck order. Now, YOY, there's been a very strong jump, and for 2026 itself, the cumulative orders are up 110% on a YOY basis. Seasonality month on month is seen in this particular time frame, so it's down from 34% in the month of March, so some commentary there. Second one will be on results. Revenues is seen on a consolidated basis to grow at 18%. EBITDA expected to rise by 15%, but the margins, the percentage will be down by 50 basis points to 16.9%. Largely because of the commodity cost impact. So some commentary there will be something to watch. Profits expected to rise by 30% on a consolidated basis, but that's the second key point. Watch out for what happens in standalone. The revenue growth is expected to be lower, so consol business will do much better in this quarter. And just final 2 key points. After Q3, the company had said that the worst is over for them, and hence you saw very sharp reaction post that, and they also said that it's fair to say that the worst is behind us as things are starting to look up both in the domestic and the export market. So that's point number 3. And fourth and final point on what to watch out for has been in the steel business of Europe, which was the loss-making entity, the timeline for that, and defense continues to be one of the promising areas for the company.
Okay, Puneet, thank you for that. So we're setting you up for the day and all the major results which are coming in. The other one, of course, is Lupin. The street is expecting strong earnings this quarter for Lupin, with the US business leading the growth chart. Varsha, what are you penciling in?
Well, every company has a story. Now, for Lupin, why strong numbers are expected? Because of the there are limited competition drugs which are actually aiding for the company. Now, on to the four numbers. Well, revenue is expected to rise 22%, EBITDA may rise 42%. Look at the margins. Margins are expected at 27% versus 23% last year. Net profit may rise 54%. So strong year-on-year growth is expected, though quarter-on-quarter or sequentially you may see some pressure. While onto the revenue drivers, US business is expected to lead the growth. Tolvaptan is expected to support the growth, which treats low sodium in blood. Onto the US business, revenue is expected between $346 to $350 million. Growth will be driven by key generics and the new launches, and the limited competition products will actually aid performance for the company. Onto the India business, growth is expected at 10 to 11%, which will led by chronic therapies ahead of IPM. Lastly, on the outlook, niche launches will support US growth, and India business is expected to remain steady year on year. So overall, a strong set of numbers is expected when it comes to Lupin.
We'll take a very short break, but don't go away. We have an exciting half hour up ahead for you. We're going to be speaking to Gurmeet Chadha on all things markets, and of course, speaking with the Brigade management on their numbers and their outlook. Pavitra Shankar will be with us. We'll be right back after this very small break.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open.
All right, welcome back. Markets cooling off. Just pull up the intraday of the Nifty, cooling off a bit in the last few minutes or so. It's still in the positive territory, but the sectoral heat map will also give you an idea of what is working. The bank Nifty also not really firing this morning. Auto stocks are the one which are in action, and we'll pull up the internals of the Nifty Auto, Bajaj Auto, that way leading the pack, and that's pretty much the only one which is giving you some action over there. Hero Moto also looking pretty decent, as is M&M and Bosch. So it is an auto day in that sense, but nothing too much to celebrate. I want to pull up the mid-cap intraday, because remember, the mid-cap and the Nifty Metal both hit new highs before cooling off. The mid-cap 150 is also cooled off a fair bit, so that profit booking coming in, and that really is the mood, isn't it, Neeraj, where that confidence that things are going to move very clearly on the geopolitical front is still not baked in.
Yeah, and for the right reasons, right, Tawana? Just the number of pushbacks that we've gotten on the posts that have been done, that we are at the end of the war, when the other side has nothing out there. It's unreal. I've never seen a geopolitical situation with conversations and the posts of this nature ever in my life.
So, I think this is geopolitics in the world of social media, because a lot of your information is coming through sources on posts. You don't know half the time, even if the right person is posting, are they an actual representative? So it's getting a bit fuzzy, and especially on the Iranian side, because that nation functions in a very different way.
Yeah, but okay, you've tracked this far longer, but my limited point being, earlier, or in the case of, let's say, in any other conflict that we use, if it was fuzzy because there was lack of information for the right reasons, you don't want to reveal military secrets out there. This is fuzzy because of misinformation being fed on almost a daily basis.
Yeah.
It's unreal as to how this is happening.
I mean, war by reels? Have you ever seen that?
Yeah, exactly. Well put, yeah.
I mean, so it's psyops completely. And in the Iranian context also, that whole leadership is functioning in a very different way. It's been closed off. The world is now discovering what they can do or what they do. So it's all a bit confusing over there. But let's go back to what the markets are doing. And like we said, the markets have cooled off. Some newsmakers that we're focusing on, Citi has downgraded Vedanta to a sell. Sharad is joining us. Details of the brokerage note. What is Citi saying, Sharad?
Well, a big downgrade coming in for Vedanta from Citi, and of course there is an uncertainty now post the demerger regarding the company's cash usage policy, and of course the dividend distribution segment as well. And because of that, this downgrade is happening in. From buy, it has gone to sell rating, and the target price is set at 265 rupees per share. That implies a 17% downside from the current levels. Now, more than 90% of this attributable EBITDA is only from the zinc business, and that is where there's a bearishness coming in, because there is a change in the dividend policy, and Vedanta no longer is bound to be there by the earlier policy of dividend distribution. And that is a key concern coming in, and that is where uncertainty could come when it comes to the cash use. Apart from that, the spot LME is also suggesting that Vedanta is currently fairly valued. So concerns coming in from broking houses when it comes to Vedanta.
Yeah, most certainly. By the way, some stocks need a specific marking. So in Arvind, a deal has come through. If I'm not wrong, that's one of the messages that somebody sent, but 8% higher for Arvind, 420 and counting. Watch out for that. Paytm is a healthy 6% higher, so good move today. And crude sensitives are reacting. Kansai, Nerolac, for example, up 5%. Keep that in mind. The stock which has literally taken my breath away by the virtue of its move is Sterlite Tech. Up another 5% today. They are now investing about $100 million in the US as well. But it's not about just the 5% up move today. Look at what Sterlite Tech has done in the last 3 months or the last 6 months, from a 150, 160 price to currently about 350, or currently 358. That's about 100. In 6 months, it's a 214% rise. This is when markets by and large have sulked. So quite interesting as to the move that has happened there. And Tamanna, we're talking about Vodafone and what it is doing. SpiceJet is not doing badly either, up 5% today.
ATF relief for all airlines. I want to see what Interglobe is doing as well. So SpiceJet, Interglobe, let's look at those. 5%. SpiceJet is on a upper circuit today. Interglobe cooling off a bit. So possibly ATF relief is one of the factors which is looking at. Even we should look at Kansai Nerolac, Asian Paints, Indigo Paint, some of the paint companies as well, as you have that relief coming in from crude. So crude sensitives will be one big I would say factor to look at. But if you're looking at some other stocks, we were talking a short while ago about Hero Motors, and look at what Jefferies is saying. They've upgraded to hold from an underperform. Big upgrade come from Hero Motor, even when Bajaj Auto is in focus. And we should do a split screen with Hero and Bajaj on both sides of it to look at that stock price. Bajaj Auto also, of course, numbers, and then plus that buyback coming in, which the street always likes a buyback. But as far as Jefferies is concerned on Hero Motor, they've upgraded to a hold from an underperform. Target price set at 5,000 rupees. That's actually lower than where the current market price is. But the way they describe it is important. They're finding a trough. The two-wheeler demand is holding up well and expect 8% industry volume CAGR over FY26 to 29. Hero continues to face adverse demand profile shift but has regained some market share. EV franchise is improving as well. Valuation is reasonable and 4% dividend yield is attractive. Let's look at Hero and let's look at Bajaj while we're talking about it. TVS is the other one that we should pick up as well, and just take a look at what's happening at that stock. So auto sector and especially two-wheelers in focus this afternoon. So that becomes one key segment. What's surprising is that banks are not holding out at all. Maybe some of that priced in yesterday after the emergency credit guarantee scheme buffer that they've got.
Just what I think Kush, Shrikant and everybody else is saying, that this the trajectory of the bank nifty is looking so weak and one trigger needed, but maybe that credit guarantee scheme wasn't a trigger enough. But Tamanna, you pointed a very nice bucket of stocks, which is the paint companies, because one is Kansai Nerolac, which is doing well. Nuvoco Vistas as well is doing reasonably well for itself. So clearly that piece of the pie is looking okay. Some brokerage names are interesting ones at that. So Aptus has one, and Investec has a note on Aptus. They have maintained a buy with the target price of 315. They say growth resumes in Q4. Strong disbursement growth was seen, and AUM was up about 21% YOY. Disbursements grew about 17%, and profit after tax was broadly in line with estimates. But asset quality has improved, and valuations are cheap for attractive return multiples. Maybe that's why the stock is up 5%. On cue, Gurmeet Chadha with us to talk about his thoughts on the markets and the way ahead. Gurmeet, thanks so much for joining in on a short notice, must say, so really appreciate your time.
Most welcome.
Gurmeet, while the broader war overhang remains and the Nifty is sluggish, the broader markets have hit highs today. So if you're in the broader markets, you've come back to the normal bull market that you were in. Is that a right way to think of it? Or is this something that could correct?
Needed selectively, yes. So if you, for example, were in energy space and power equipment space, you are actually probably better off than what you were, let's say, 6 months back. If you rightly positioned in defense, that space has done very well. If you've also picked up consumption names where especially food and beverages segment, look at Nestle's number, look at some of the other commentary which is coming, you have done well. But let's say if you've been, and maybe if you take Bank Nifty's move in last few days, maybe that as well. But if you are still in a little bit more in oil sensitives, I think consumer durables, etc. So it's been a bit of a mixed bag, and that's where I think it becomes very tricky in this market. I think one concern which is there is that FIs are still big sellers. Yesterday also we saw 6,000 crore kind of a selling. I think YTD they are already $15-16 billion out of India, and this is coming when globally flows have been very good. Just look at Kospi, look at Taiwan, look at some of the emerging markets. So I think the pressure now is more supply side, and I think the market is now factoring in some kind of a resolution happening over the next few weeks. But it's the supply pressure, I think, which may keep things under check for some more time.
Gurmeet, I'm wondering if this is that moment that investors will look at in hindsight and say, did I miss this moment? Because those opportunities are coming in fits and starts, right? Unlike a COVID where you had a very clear crash down and then, if you had the guts to take a contrarian view, you would. Here, those opportunities are presenting themselves in little flashes and bursts. Are we looking at some of those opportunities right now from a 2-year, 3-year perspective?
Yeah, 100%. Just look at the way, as I was telling you, the entire power equipment space has done. If you picked up any transformer stock, you would have made 30-40% in last few weeks. You would have picked up any good transmission distribution name, whether you were in Hitachi, GE Vernova, whether you picked up a cable and wire name like Polycab or KEI, or you picked up something, even in some of the PSU names in renewables, I think you would have done well. Polycab numbers were phenomenal yesterday, and management guided for better growth. Even the FMEG segment did well. So I think it depends upon your position. Similarly, if you were in tier 2 banks and PSU banks versus HDFC, ICICI, you have done a lot of good work in terms of to your portfolio. So I think it's a market where it's rewarding earnings, it's rewarding good guidance, and it's punishing subdued performance despite valuations being reasonable. So IT, because the commentary was so weak, despite valuation comfort, stocks haven't done well. And you have somebody like a Coforge delivering good set of numbers, valuations being rich, and markets rewarding. So I think the only hedge now is good earnings and good outlook. And that is how the market is getting positioned. I also think at some point of time, some bit of unwinding may happen in the AI trade. It's becoming too stretched in my view. I may prove wrong. Markets can always make you look stupid in the short run, but it's getting stretched. Look at Kospi, 40% movement in a month. Look at some of the Korean stocks, look at some of the other names. I think it's too sharp a movement. I think some distribution will happen. And that's when probably, assuming oil prices remain low, you'll see a broader participation coming from some of the weaker names as well.
Are you liking what you're seeing with the auto space, Gurmeet? Especially the two-wheelers?
Oh yes, we've been overweight auto. We have TVS in the OEM space. We have Sandhar Technology, which we added a weight more, where 60% portfolio is more two-wheelers, 40% is four-wheelers. Sandhar is the biggest supplier to TVS, almost 55%. And they are now all 3-4 verticals are doing well. Fabrication is doing well. Log division is doing well. EV portfolio is shaping up nicely. So that's one stock we added. We added Lumax. That's done very well. It makes LED lights largely, and that's also done well. Off late, we have added one very small auto ancillary, which is Rajratan Global. They make bead wires for tire. The stock got battered in 2022 post-COVID after their Thailand business got impacted by Chinese dumping. That business has stabilized. They've set up a new plant in Chennai, which will contribute another 50,000-60,000 tons this year. So, good operating leverage kicking in. And hopefully with broader auto demand remaining good, I think this should do well. So I think in our auto ancillary mobility portfolio, we must be about 18% roughly in our portfolio.
Gurmeet, what is it that you would look to get off the train in, presumably in the broader end of the market? Because this has a rising tide, it has carried a lot of boats along with it. Not everything is going to benefit. In fact, some things might get impacted badly because of higher crude and otherwise.
So Neeraj, as I said, I agree with you in terms of fundamentals. But as I said, wherever earning momentum is good, market is rewarding it. So maybe the energy portfolio you may want to trim a little bit. Let's say, for example, if oil prices come off and they come off durably and not just intraday, maybe some of the oil sensitives you may want to shift some weight. Because the energy portfolio for us is like 22-23%. So maybe take off 10% because you made 30-40% in few names. And get back to things which are still beaten down. Maybe selectively chemical names, they are showing some signs of pickup. Selectively some names in, for example, somebody like a Reliance, which hasn't done well because of the pressure on polymers. Recycling, circular economy. For example, we have had a notification from the government on 40% mixing of recycled plastics. In PET bottles. We have a critical mineral mission in terms of recycling of critical minerals and resources. So some of those names, which are not as much in flavor and maybe in some cases out of flavor, you may want to get in As I said, provided see a durable reduction in both in energy prices and in terms of shipments from Hormuz.
Okay. Talking about the West Asia crisis, one sector which seems to be sort of an indicator of what is happening there is real estate, and sometimes it tends to move in tandem with whatever is happening geopolitically. A bit of a mixed bag in the Q4 numbers. Gurmeet, what has been your takeaway?
I'm a little worried, Tamanna, to be honest, because if we are talking of negative hiring by IT services companies, this will have an impact on commercial space as well. I think I'm seeing a lot of startups struggling now to raise money round 2, round 3 and series B, C, and that they were bigger acquirer of commercial real estate. And then it has a trickle down effect on discretionary consumption, higher end discretionary consumption. So especially the mid luxury segment may get impacted. I think the mass segment will continue to do well. So we are in a very uncharted territory where probably you have a blue collar boom and a white collar slowdown. So if you see the biggest openings, if you see job portals, they are electricians, welders, commercial truck drivers, mechanical shop floor workers, right? And maybe the bottom of the pyramid does well. So I think you probably need your consumption portfolio to reflect that. Be a little more towards the lower end of the consumption. Look at something like Meesho, for example, doing such well. Some of the good platform plays. You saw FMCG businesses reporting good numbers at the lower end. And maybe, get a little slow on high-end discretionary, which is, let's say, luxury real estate and others. So that's my thought. It's a little early to comment on that, but that probably seems to be the case where you will have a bit of a blue collar boom.
Gurmeet, thank you so much for joining us. It's always a pleasure to have you on and to hear the clarity that you bring to everything that we ask you under the sun.
Thank you,
Gurmeet Chadha there. But since we were talking about real estate, just building on that, we're focusing on Brigade. Brigade's Q4 numbers were softer than expected. Sharad is joining in to give us a run-through of the operational metrics before we get into that conversation with Pavitra Shankar of Brigade. Sharad.
Well, that's right. For Brigade Enterprises, the overall weak set of numbers have come in. But what led to this? There are two key reasons for that. The first one is the pre-sales numbers. They were lower than what the street was estimating. And remember the cash flow segment, that has also been a concern. The operating cash flow, to be precise, that's down 34% on a year-on-year basis. And this is because of the higher construction spends and the overheads coming in. Overall, the numbers have been impacted due to the overestimation of the launch pre-sales which were there, and of course some collections were also on the weaker side. Hospitality also, the segment that just grew only 5% on a year-on-year basis. So a little bit of concern is definitely there on the counter, and that's why we are seeing a sell-off, at least in the opening session.
Yeah, I'm going to just take that to Pavitra Shankar, Managing Director at Brigade Enterprises. Pavitra, thank you for your time and sitting down with us on your results. I think if I look at your pre-sales Q4, they look pretty robust, but on an annual basis, it's underperforming versus what analysts were penciling in and some of your guidance as well. How do you see the entire picture?
Hi, good morning. Thanks for having me. Yes, we did manage to get a good Q4 in. We launched 4 million square feet. On the residential side, we sold around 2,500 crores of pre-sales, which equated to just about 2 million square feet. But yes, for the full year picture, we did see that we weren't able to get to where we would have liked to be. A lot of that was due to our launches getting back-ended. Some of the approvals did not come into the financial year as we would have wanted it to happen. We did manage to salvage a couple of those launches though, and that reflected in Q4, whereas the first 3 quarters, we didn't have much of launch activity at all. That said, our sustenance sales did do well, and which is why the overall year is still, looking quite okay, considering that the last few years, at least 40% of our numbers has come from new launches. This year, that contribution was less, but the overall, contribution from sustenance was good. So I think in terms of on-ground demand, things are still looking all right. And, we are positive about the launches that we have upcoming as well. We do expect some of those launches that are coming into H1, to do well. But even in the upcoming financial year, we have some dependency on, new launches coming in to the pipeline.
You've actually, Ms. Shankar, hit on exactly what I wanted to ask, because I'm assuming from what you've said that the margin squeeze, the net profit drop is all because of the delay in these launches and the permissions which come in. Isn't that a problem that can persist?
So a couple of things there. The margins that you're talking about are actually reflecting revenues and which happen at the time of registration and project handover.
Okay.
So it's not related to the pre-sales numbers. The pre-sales are more of a leading indicator, what we might expect to happen over the next, few years after construction has happened. But on the margin side, it's really the projects that are getting registered and handed over today. Those were those were sold at slightly lower rates than what we have today in terms of an APR. So the margins for those projects are a little bit lower, and that's what we are seeing today. But on the pre-sale side, a lot of these projects, or most of these projects, are happening at much higher rates than we sold, say, 4 years ago. So in future, our margin outlook is much better than what you're seeing on ground today.
Pavitra, good morning. Neeraj here.
Hi, Neeraj.
You are visibly trying to change the, the texture of your company from being a real estate or a flat selling company, if you will, if I can usually put it, to having multiple streams. Is this diversification a strategy to effectively counterbalance a slowdown in one of the segments with the other? And how does it start looking, let's say, 12 months or 24 months out, the different segments in percentage terms, if you will?
Actually, Neeraj, we've been a diversified company from a domains business, like from a residential, office, retail, hospitality perspective. I think for our last 40 years, this is our 40th year. The last 5 to 6 years have seen a dramatic ramp up on the residential side, and naturally that is because of all the opportunities that were there for that on the residential side. We are entering into a capex cycle on hospitality and commercial. So yes, in the next few years, you will see a lot more contribution from a value perspective on both the hospitality and the office side of the business. Residential will also increase, but all these three different segments have their own market cycles. I think real estate or the residential side, we've seen a fantastic cycle for the last few years, and we do see that stabilizing. And the office market as well has done well, and we are now positioned to put a lot more focus and capex into our office portfolio. Hospitality, as you know, that entity listed last year, and we do have an expansion plan there as well, adding another 1,700 keys to an existing operating portfolio of 1,600 keys. So, we have always believed in the diversified business and continue to go in that fashion. I think what we're seeing today is just a blip in terms of launches not coming in to Q4, and we will see that normalize over the next financial year.
Through the year, it will get normalized, and you're not facing any issues with regards to the clearances from the authority as well, right? Because at this time last year, that was an Achilles heel for you and multiple other developers in that region.
I think the approvals environment has continued to be a little challenging compared to historical for markets like Bangalore. I think in Hyderabad and Chennai, there is a little bit more predictability. There are a lot of changes in Bangalore in terms of, the local authorities. Some of the rules are constantly changing. So from that perspective, it's less clear than maybe what we were used to in the past. But I would say, we are expecting things to still remain a challenge. So, we are working hard to see where we can constrict some of those timelines and, work with that. So we're not going with a rosy picture in terms of expecting things to happen sooner than they possibly can.
Talking about the picture ahead, Ms. Shankar, some concerns about whether it's going to be less rosy, especially for commercial real estate, with what's happening with IT jobs and looking at the concentration of where you are. I know you'll say GCC opportunities will replace some of those job cuts, but on balance, isn't that a headwind that you are possibly preparing for?
Yeah, I think on AI, it is a developing situation. There's a lot of conversation and, thoughts about impact, which part of the workforce it's going to impact. I think it's definitely something that's that's disrupting. We are keeping a close eye on it. Whether the jobs are going to shift from IT to GCC or even within GCC. That said, there are still a lot of new GCCs entering the market that are AI first and AI driven, and we're still seeing opportunities for those GCCs to expand. Even in markets like Chennai and Hyderabad, which are our newer markets compared to Bangalore for us, we're seeing pretty strong demand on ground. I think it's developing. We'll have to wait and see. Ours is a sort of longer term business that is reacting to short term news and short term discussions on this, but we will see how it pans out. If there's any one thing, we are a long-term player. We're looking at still building high-quality developments, mixed-use developments, which I think are what do well when it comes to flight to quality. So from that perspective, we are still very much geared up and positive about all three markets where we are.
Thank you so much for coming in today and answering all of our questions. We truly appreciate it. Pavitra Shankar there of Brigade.
Thank you.
And as we wrap India Market Open today, I wanted to highlight this story. This really caught my eye, Neeraj. And there, the visuals on your screen. Look at that. That's a humanoid that South Korea has introduced. It's its first humanoid robot called Gabi. And they actually had Gabi take the oath and go through all of the procedures to become a Buddhist monk. I thought this was stunning. So futuristic and stunning, but this is happening in this day and age.
Yeah, and I don't know if purists say that, oh, this is bad, but this is fascinating stuff, Tamanna. This is fascinating as to where we are going on this line.
Yeah, the fact that there is a humanoid is fine. Now we are seeing versions of that. But this inculcation into culture and religion and humanizing the humanoid, I thought was very, very cool.
Your and mine future best friend could be a humanoid.
You never know. I think for a lot of people, their AI chatbot is someone that they talk to more and more. Maybe not in India yet, but around the world, that's happening more and more. Well, we leave you with food for thought as we take a very quick break from Neeraj and the team that put the show together. Thank you for watching. Stay tuned. Ask Profit up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Economy, business.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri, joining very shortly by Mahima as well. But before we start taking all of those, a very quick check of what the markets are doing, because another important session where you saw multiple key earning reactions today, and Bajaj Auto was definitely one of them. So you've seen a recovery back again from the lows for the Nifty 50, now about 24,300 yet again. Taken across from the dash that we'd seen essentially in the last hour of the trading session. But also the other aspect that, let's look at the heat map now, also giving you that perspective. Bajaj Auto, I spoke about a big buyback announced by the company in its 100th year. So they've distributed all of their profits for FY26, and that will be by dividend and buyback. But HDFC Life is now the top Nifty gainer, Bajaj Auto in the top two. So is Mahindra and Mahindra, continuing their momentum after a strong set of earnings for Q4. Apart from that, we've seen Titan being slightly under pressure today. So is Sun Pharma as well as Adani Ports, Indigo and TCS. Those are some of the other ones. In terms of sectoral heat map though, we've seen, in terms of the sector that's doing well, auto continues to be that the second consecutive day. Yesterday was led by reactions, what we saw on Hero MotoCorp as well as on Mahindra and Mahindra. Today, Bajaj has taken that baton and doing very well in trade today. India Defence as well as energy are some of the other sectors that's doing well, but majority of them being in the green today is something that we'll take with both hands at this point of time. And quickly, the advanced decline ratio as well now has been largely positive, 2:1 or 3:1 ratio that we've been seeing today as well, very decently, of almost 1,850 stocks that are advancing in trade today as well, versus the declines of 736, almost 2.5 times are the ones that are favoring the advances as of now. But also the individual names, the BSE 500, because we saw some reactions coming in on Shree Cement early on in today's trading session, but barring that as well, a lot of result reaction today. Embassy Development yesterday was up 20%, so is again on the back of that NCLT update that's benefiting the company, so another 20% today. Tejas Networks is is moving in today's trade yet again, and so is Godrej Industries, Rosari Biotech, Orient Electric as well as Aptus Value. Now Aptus also buzzing on the back of results. The brokerages maintain a positive view on this counter, while largely KPIT Tech has been disappointing. Brigade, we just spoke to the management on India Market Open, as well as PB Fintech down. It's a decent result from PB Fintech, but still down in trade today as well. But as always, it is Thursday. Let me welcome in Kush Bora, founder of kushbora.com.